Activity in the residential property market continues to be hit by the country's economic low growth, but FNB's property mortgage barometer says home loan repayments remain solid. It suggests that the property sector has some resilience in a moment.
Been a tough year for South Africans, with the economy expected to show almost no growth in 2016. That poor growth has hit the residential property market, which saw a slowing down in the volume and value of home loans.
When you look at new bonds, or value of new loans granted, home loans granted, according to the NCR data, by the second quarter you were already running at -1%. So it's all broad slowdown, but in terms of market growth, it's not there anymore. But in terms of financial stress, not a bad situation. We've had some mild increase in arrears levels, non-performing loans.
According to FNB, if you do own a residential property, you can expect it to grow by an average 3% next year after an expected 5.1% for this year. But what are the chances of you selling your property next year? And will there be healthy buyers out there? Well, FNB's mortgage barometer shows that home loan transactions made by individuals declined by 6.3% in 2016 as a whole. It will continue to decline next year by a slower 2%.
A longer time on the market before sale, I think, reflects an increasingly challenging environment for sellers at this stage, which is to be expected given that demand has slowed.
John Luce believes the Reserve Bank is done with interest rate hikes for the time being and will keep interest rates at current levels, where prime is at 10.5% through 2017 and 2018. He says expected stable interest rates and a lower household indebtedness will see buyers performing even better on debt repayments. Devin Murrigan, SABC News, Johannesburg.